Hello, everyone. Welcome, guys. Welcome. We'll get started shortly. Welcome, everyone. Welcome. We'll get started shortly, everyone. Hello, everyone. Welcome, guys. Welcome. Guys, welcome, everyone. Guys, we'll get started shortly here. Hope everyone had a great weekend. Hey, Ray. Welcome, Ray. Welcome. Welcome. Hey, Solomon. Welcome, Solomon. Hey, Betty. Welcome, Betty. Welcome. Hey, Janica. Welcome, Janica.
Hello, David.
Hello. Guys, we'll get started shortly. All right. Okay, guys, this is our beginners class. And we'll get started shortly. We'll get started shortly. Welcome, everyone. Welcome, everyone. We'll get started shortly. For beginners and Q&A class. Welcome, everyone. Welcome. Hello, everyone. Welcome, guys. Welcome. All right. Hey, Sedona, welcome. Welcome, Sedona. Asma, hey, welcome. Welcome. All right, guys. This is our beginners class. All right. And we just started this class again. And I'm glad that we've gotten back to some of the basics, right? So with our beginning traders, and we'll also incorporate Q&A, okay? Um, in our beginners class. All right. Um, and I know we've got some new faces here. There's some things that I do want to go over for basic, some of the basic concepts in trading. All right, but we do have some of our advanced traders here. So I would like you guys to, if you have any questions, again, we incorporate Q&A with our beginners class. So we have a lot going on in the markets. All right, a lot of good stuff going on with the equity markets and even forex. So we'll incorporate any questions you guys have on that also. I know during the week we do our live classes, and sometimes we get so busy with trading, okay, that we delay some of those questions. So we want to incorporate questions, and then our new traders can actually learn from those from you guys also, our experienced traders. Okay, so I'm going to ask. Just like we always do, are there any as new traders or even our experienced traders, what questions do you guys want me to touch on today? All right, any questions that you guys, or ideas, concerns that you guys want me to touch on today? Hey, Sanchez, welcome. Welcome. All right. Any questions, any idea, any topics, anything you guys want to learn about, you want me to touch on today, this morning? Anyone? No one? No one? All right. Who is new, brand new, never traded before?
I am Jenica.
Janica, hey, Janica. You've never traded before?
I have never traded before. I've had, my father bought me some Apple stocks recently.
Okay.
And I bought about 20 Apple stocks and made about $300 off of them. Okay. And he bought them for me, sold them, and that was it. I had them for maybe a month and made $300 off of them, and that was it. And he plays the market safe, but he knows a lot about it. He bought, the Trump book.
Okay. Okay.
Way back when, and he loves stocks, and he's been dealing with stocks on the safe side, after making a few fumbles, 20 something years ago, a long time ago, but he's been playing it safe and doing it the right way for so long and keeping our family in the comfort zone for as long as I can remember. And he's been doing it good. And he doesn't give me the secrets, but he just says, read Trump's book, start off that way. Like that's what he tells me. He's like, start off, do that. Just start off, start off slow and look at the markets and do it like that. He'll say it like that, but not that he's, it's not like he's, a Trump fan or anything, but that's how he started off,
Yeah. And I think most of us going back, we did the Art of the Deal.
Art of the Deal,
one of my favorite books. And yeah, absolutely. So it sounds like he's more conservative, right? Plays it safe.
Conservative, exactly.
Okay. Well, I'm glad you're here.
This is my baby step.
Okay, baby step. Okay, all right.
Because I got to get moving in the family. I got to go in the right step. So
okay.
This is my baby step.
We might take a look at that Apple stock and see what it's doing. Okay.
Thank you.
You're welcome. Welcome. Let's see here. Who else? I thought I saw. Hey, Gerald. Welcome, Gerald. Hey, Louis. Welcome, Louis. Hey, Joe. Welcome, Joe. Anyone else? Anyone else? Any particular topics you guys want me to touch on? Any particular trades? Hey,
Maybe,
Louis.
yeah, maybe we can go to the systems today.
Oh, the systems. I think,
Yeah,
yeah, Mary had mentioned that last week.
we
Absolutely.
did. Yeah,
Thanks for reminding me.
yeah, for sure.
So we'll go over the different systems. All right. All right, Louis, great. Anyone else? Anything else?
Hey, I'm also brand new
Okay, hey,
as
Ray.
well.
Welcome, Ray. Welcome, welcome.
And I was hoping to, I don't know, like best ways to start, I guess, with
Okay.
stock
Okay,
and
best
trading.
ways. All right. Thanks, Ray. Best way and welcome. Best ways to start. Okay. All right. Okay, Jenica, let's see here. You mentioned that Apple stock.
Mhm.
And how long ago was this when your dad
3
bought?
months.
3 months ago?
Yeah, like February.
Oh, okay. All right. So fairly recent. Okay.
Yeah, I had it for a month. I probably sold it in March or no, April.
Oh, okay. Okay. Can you guys see you should see my screen here. Okay. For the new folks that are here, I've been trading for a long time, over 25 years. So I've worked with lots of traders through the years. And about 13 years ago, I started this company called Monster Trading Systems. So what we do is we build trading systems like what you see here. Okay. So my goal is to help traders kind of figure things out, right? Trading can be difficult, but what we try to do is try to make it as simple as possible. The symbol Apple is what? APPL, I think. What is the symbol for Apple?
AAPL.
AAPL. AAPL. Okay. So we'll just use this as an example here, Jenica. So let's see here.
Yeah, I don't remember exactly.
So you said, it was around January, February was?
It was, I think March to April when we sold it.
March, and the entry was what month, roughly?
March to April.
March. Okay, so you bought around March. Around March is about right here, and then sold about April right here. That's about right. Here is March and April. Okay, so March was right here, roughly, right? And then April was right here. So this is where we got in.
But we made about $300, so.
And you got out here. And you made about, let's get some green here. I made some money. All right. And we made about $300 here. And your dad was the one who executed the trade?
Yes.
Okay. Did he mention to you why he was buying Apple? Did he give you a reason why?
The safest. That's what he felt was the safest, most, that's what he felt was best for me.
Okay. And why did he say why he felt it was safe?
no, he didn't go into it for
Didn't
his
go
little
into
girl's years. I guess he felt it was too complicated for little old me because I didn't know that much about stocks.
Yeah. Well, most people, that's not unique, right? Most people think, well, because it's an Apple, right? Home Depot, right? Walmart, because of the name, that the stock might be safer, right? So,
Right.
right, rather than a name that we don't know. Okay. So that's not unusual. Okay. When we trade though, we want to think about we want to. It's not about being safe. All right. It's about catching a
Why do
move.
you think you picked it? Yeah. Why do you think you did?
Well, because yeah, we get a self as individuals, right? As individuals, we feel that, and that's why a lot of individuals buy and hold, right? No, your dad didn't do that in this case. You guys got out, you got in here, and then
Well,
got
I
out.
needed the money. I
Out.
needed the money. So I forced him to take it
Oh, you
out.
forced him.
I
Okay,
forced him to take it out.
okay, okay, okay. Let me ask you. This is Apple here. This is Apple stock right here.
Mhm.
And this is where Apple made a bottom down here. And this is where it made a top right here. All right. So
Yeah, it went
currently
crazy just recently.
it went crazy, right? It's at 180 now. All right. How do you feel about the fact that you got out?
Oh,
And
I'm pissed, but I had to. I had no choice.
okay. But if you could have stayed in, would you have stayed in?
Oh, sure.
Okay. How would you know to stay in?
Oh, I wouldn't have. I would not have. I would not have known because I know nothing about stocks.
Mhm.
He would have. Maybe he would have, but I would not have.
Yeah. Yeah. So thanks for being here, because what we're going to show you today is not only when to get in, okay, but also when to get out. Okay.
Okay.
And and rather than randomly getting out because for whatever reasons, right, we want to follow a process. Okay.
Okay.
So today we're going to go over how do we get in and out safely out of a stock, crypto, whatever it is. Okay. Rather
Mhm.
than because we feel safe, or we even like that company. Okay. Or
Mhm.
someone told us, right, that it's a good buy, or it's a good company. Okay. So what we do is, and this is for everyone, right? What we do is we use technical analysis, all right, which is what we're going to go through. All right. So rather than fundamentals, we're going to focus on technical analysis, the charting, right? We're going to go over the charting, right? How to professionally buy and sell. All right. And this is something, but perhaps, right, once you get this information, you can relate this to your dad, and that could certainly help him, right, in his trading. Even if he
Okay.
uses fundamental analysis, if he can incorporate some of this, okay,
Mhm.
then that could help. That would help him. Okay. I'm going to go
Okay.
through some basics here. And then Lewis will get into the different systems. And then Ray, your question was the best way to get started. Will some of this will help? Okay, some of this will help you also, Ray.
Cool.
Okay, all right. And then our this will be a refresher for our current traders. But in addition to that, I want you guys, those of you who are in the markets this week, if you should have questions about the different moves that we've had this week. Okay. So, um,
Mhm.
okay, Janica, I know you're new to this. I'm going to come back to you since this is your question.
Okay.
And keep in mind your Apple stock, right? So the buy on Apple was about, let me bring this back up. And we're just going to use your Apple stock as an
It
example.
was at 53.
At 53. Okay. So the buy was at about 53 in February. About March, I'm sorry, March. So about right here, 53, 153. 153, correct?
Yeah.
From 153. And then you made about $300. So what was the exit about? You remember?
I don't know, but I made $300. So
So
whatever
let's
that
say
is.
March. And we've all done this,
The
right?
other thing is I'm not good at math.
Yeah, so we've all done this. Well, it depends on how much you traded, right? So that's fine. So March, April.
Another drawback of not doing it.
So was the entry around, was it February or March was the entry?
It might have been the end of February and then
March. Okay, somewhere in March. So February, March. Okay.
but I know it was 53, so because that was buried into my skull.
Okay. 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 So I want to show something here. And we'll just use this right here. Okay. Okay. What's happening to the price? This each candle here, all right, is your price. This is Apple stock, right? This is Apple stock right here. Each candle, right, is a day's worth of what we call data or price action. Okay. So this is Apple right here. Apple right here. Okay. And there's no wrong answers. We just want to think about this, right? I want you to think about this. So here's each candle right here. Okay. What is Apple stock doing during this area here? What's Apple stock doing?
What, where your cursor is going right now?
Yeah. What's Apple stock doing?
It's going down.
It's going down.
Very good. Very good. So what should we be doing?
Sitting.
Sitting. Very good, right? Sitting, not buying, holding, right? Just holding
Right.
back, right?
Mm-hmm.
All right. Now here,
You should be buying.
we should be buying, right? Very good.
Mhm.
Very good. And why should we be buying here?
You should be compromising on it.
Okay, but you said it the right time, right? We should be buying, but why should we be buying here?
You
So
should
we
be taking advantage of it.
Bingo, right? We should be taking advantage of it. Bingo. It's that simple. That simple. All right. So if the price is going down, right, the price is going lower, we should be sitting, waiting. All right. When the price starts to move higher, we should be buying. But that's what most people don't do that. What's great that your dad did, your dad bought, right, at the perfect time, right? He bought when the buyers, right, when the selling stopped. All right. So here, he didn't buy any of this here. He waited when all of that selling has been done. So he waited for whatever reason, right? He waited and then he bought here.
Well, in
Right.
my case, he sold. He waited. I told him I had to sell it, but he didn't sell until he knew I had to get out, but he didn't sell it until it went up again. So that was good. He waited. I said, Dad, I have to get out, but he said, I'm not going to sell it until it goes up again.
Okay, okay.
So he waited at least a week until it went up again, and then he sold it.
So he probably, right? So it went down about here, right? This is where it went down, probably right here.
Right.
And
He
then he
waited until
waited,
it went up again.
and then
Yeah,
he got out.
exactly.
He
That's
got
exactly
out.
what he did.
He got out here. But who is
Mhm.
who is still in control of the price? And I know you got out, right? Because you wanted to take the
For personal
profits.
reasons, I had to get out. Yeah.
Yeah, yeah. All right. But if we look here, should we be still buying or should we be getting out?
Buying.
Buying, right? How do we know?
How do we know?
We don't, right? We don't know, right?
Right.
Yeah. How do we know if we should get out here or wait here? We
Tell
don't,
us.
right? We don't, right? We don't, right? So this is what most people will do, right? They will buy when the price is going down because they think that we're going to get a lower price, right? Price keeps going lower, right? So I'm going to buy at the low, right? Hoping that it will move higher. But guess what? This was a low here. This was a low here, and price, look, the price keeps going lower, right? This was a low here, and then this was a low here. All right, so good answer. We would wait until, guess what? The buyers are now back and start buying, okay? But rather than getting out, we would just stay in until, guess what? Sellers start to sell, right? Sellers start to sell, and now we would have to get out, right? So right here, we would continue to buy or hold, right? So here we would wait, and then here, right, we would just hold our position and we can continue to add. So as the price keeps moving higher, we call this support and resistance. As the price keeps breaking resistance, right, moving higher, we would continue to buy until at some point, right? So this price at 180, Apple could go up to 200, 300, right? But at some point, sellers would come in, like these red candles here, these are sellers. And then once the sellers come in, let's get some red candles here.
So you're saying we should always buy at the highest, and so this is what we should do to. So in general, we should buy high.
Yeah, well, we want to buy low. This is considered low here. Anyway, here is considered low. But once the buyers are in control and they're buying, yeah, we can keep buying as it keeps going higher.
So in general, we should do that on across the board. This
Across
is
the
the
board.
general way to do it
Yeah.
in the non-risky sense.
Well, it's all risk, right? It's all risk.
Right, right.
It's
But
all risk. Okay. But we can
But in general,
minimize.
don't do the hysterical buying when it's down low and just scraping the barrel
Yes, yes, yes.
is
Yes.
what you're trying to tell us. Don't
Yes.
do it when it's, crashing and burning, stuff.
Yes, yes. So what we do as individuals is because we've all heard of the term, right? Buy low and sell high, right? We've all heard that. Everyone, we've all heard that, right? Buy
Mhm.
low and sell high. Well, what can happen is if we buy, this was a low here, right? This low was 151 right here. This was a low here, right? At 145 or so. This was a low here, okay, at 135 and about, right? And then this was a low here at about 125. So, if we bought here, guess what? It could keep going lower and lower and lower, okay? Whereas if we bought here and we bought here and we bought here, it keeps going higher and higher and higher, right? So the bottom line, the way we want to think about this, all right, and in simple terms, right? There's some, I mean, there's some terminologies that we can, but I just want to keep it real simple. I just want to, just have you think of your trade, that Apple trade. Your dad did an amazing job. He did a great job buying a perfect buy entry. All right, perfect buy entry. He waited here. We don't know if he would have stayed in the trade, right? Had you not taken those profits, right?
Right.
But the thing is this, all we need to know is that if the price is moving lower, we should be out. Simple. Price is moving lower, we should be out waiting, right? Standing back, right? When it's moving higher, that's when we want to buy. If it keeps moving even higher, we can continue to add to our position. We can continue to trade. Okay. All right. Very simple. Now, there's some things that we have here, which, we need to know about: support and resistance. All right. So write that down, Janica, support and resistance, and everyone else, Ray, support and resistance. Okay. We need to know that. We need to know what's called the 4 market phases. All right. If we have some time, I'll go over that. Okay, so write that down. But just know that support and resistance is important. Okay.
What is it?
All right. Well, let's see. I don't want to get too deep into it. Okay, but if you look here, you see these lines here? You see this line right here? Janica,
Yeah.
you see this
Yeah.
line right
Yeah.
here? See this line
Yep.
right here? Right here and right here.
Yes.
And right here and right here and right here. All right. What do you notice? What do you notice with these horizontal lines? What do you notice? What's happening? What's happening in relation to the candles here? We call these candles. What's happening?
That's its
Just
peak.
take a guess. Just take a guess. What's that, Ray?
That's its peak.
Yeah, fluctuations and the
Fluctuations. Very good.
yeah.
Very good. Very good. What else?
I don't know. I just see fluctuations.
Let's do
I don't know. My eyesight isn't too good, so I can't tell what the measurements are on the sides and stuff. I can't tell. I can't tell what the readings are on the sides of the
All right. Let's
of
open it.
the boards and stuff. I can't tell. Please explain it.
Okay. How about now? You see the lines here? What does this look like? Hold on.
I don't know what the I don't know what the board is really. I've never understood it.
Okay. So if you look here,
You got me looking for my glasses and stuff. Don't do this and don't do this to me, David.
all right.
Don't make me put on my glass.
Okay.
I've never been able to decipher this board.
Okay. So we're going to keep it simple. just these lines here. All right. It's called support and resistance. Support and
Yeah,
resistance.
support and resistance. Okay.
Okay. So every time these candles break these lines, okay, that's your floor, that's support. So that means, guess what? The price is moving lower. All right. All right.
Okay.
Or we call that sellers. Sellers are pushing the price lower. See here? Every time the price breaks support, every time the price breaks support, these yellow lines, the price goes lower. Right? Price goes lower. And what that means is that sellers, right? Sellers are pushing the price lower.
Oh,
Right?
okay.
Yeah. And
All
the
right.
difference, it's see right here, see there's pressure, right? Pressure, right? See these red candles, and every time, see right here, here is your support line right here. That red candle here, and traders are watching these levels, right? They're watching these. And so when the price, this candle broke this support line, all these traders that are watching this support line right here start to jump in, all right? And either trade short, we won't get into that, or just get out. So there is pressure, right? There's pressure. As more people get out, when it breaks support, think of support as your floor, right? Right. That you right where you are right now. And then as more sellers recognize, more traders recognize the price is going down, they push it even further down. Right?
Oh, okay.
Yeah. So as here, look here. Look here. This price, this candle broke this support line right here. And look at the
And
sellers.
look at the dip and
look at
everything
the-
went down further.
Exactly, right?
Oh, okay.
All
So
right.
you could see that it's breaking, and then it just fell.
Bingo,
Right.
bingo. All right,
Oh, so you know that everything is going to collapse.
bingo. So if we know that everything is could or might collapse, what do we do? And you said it earlier.
Get
we
out.
wait, get out, wait.
Yeah.
Yeah, wait. What
I see. Eureka. Eureka.
Yeah. What would happen? What would happen on the reverse though? I want you to think about
Buy,
this.
buy, buy.
Buy. Why?
Because they're buying.
Because they're buying. Bingo. Good job. Right? Bingo. So look at this one here.
Oh, I understand it now.
Good job. Good job. Good job.
Good job to you.
So if you look here, right? Here is
So
our
it's green. In the other instance, it would be green.
yeah. And where's
Oh.
our we have support and resistance.
Oh, I understand it now.
Right? Yeah, good
Thank
job.
you.
So if we look here, right? We have right breaking support, breaking support. We should be out. This line is our resistance line. When the price broke resistance here, what happened? When the price broke
Oh.
resistance here, what happened?
So that needle going up means it went up there?
Yeah, that candle, yeah. Buyers. Yeah,
Oh, okay.
yeah.
Oh, so that's good. All
Yeah,
right.
that's good. So write this down for me, please. Write this down.
Mhm.
So when you buy, so in the future, right? When you buy your Apple stock, right? You're
Mm.
gonna buy when the price breaks resistance. That's when we know buyers are now buying, right?
Mhm.
All right. So when you buy, we don't just randomly buy, right? Or we don't buy because we like the stock or it's a safe stock or we feel it's a safe stock. We're going to buy because the buyers are buying. And we
Right.
know the buyers are buying because why?
Breaks resistance.
Bingo. Good job. You know how many years people, Jenica, they're folks that are trading the markets, they don't know that. So that information alone today is that alone right there.
That whole thing
got
has baffled me for the past 20 years. Do you have
Yeah.
any ideas?
Yeah. And you got it that quickly. Good job. Good job. Okay. So we
Nobody
wanna-
explained it that quickly. Thank you so much. These codes have baffled me for 20
Yeah,
years. Thank
yeah.
you.
So we want to buy when the buyers are buying. We'll know that the buyers are buying when the price breaks resistance, and we want to get out, all right, or sell when? When do you think we need to sell or get out?
When the support is low, right?
Mhm. Okay.
When the support, how is it worded?
Yeah. So when the price, write this down, when the price breaks support.
When the price breaks support?
Yes. So we want to buy when the price breaks resistance, and we want to sell when the price breaks support. So we always need to sell. We need to have a very defined entry and a very defined exit. A very
So I got a
defined
question.
entry. Yes, go ahead, Ray.
Because I was seeing it like the support and the like breaking part. Is it when it's like starting to go under or above, right? That the lines or the candles. Like I'm
Yes.
trying to understand a little more on the.
Yes. So when the candles go below that support line, or we can say the moving average. Okay. So I'm going to use
Gotcha.
this example here. Let's go back right here. Okay. So I'm going to use a quick example, and then we have to go through the systems for Lewis. Okay. So both Ray and Janica. All right.
Yeah.
Okay. So red candles here, the price is going down. We should be waiting, right?
Mhm.
Yeah.
Right. And the price keeps going down, breaking support levels. So sellers are in control. Okay. The price finally broke this line here, which is our resistance line, right? And guess what?
Mhm.
Green candles, buyers are in control. So we bought here. But then what happened after that? What happened after that?
It looks like it's starting to go down again.
It's starting to go down. Bingo. And it broke support. What do we do when the price breaks support? Buy or sell?
Is
What do
it
we
buy? Oh no, you sell now?
sell, right? So
Yeah.
we would have bought here. Follow me for a second, right? We would have bought here, which is about 850 right here, 850, 850 right here. All right. And then we would have sold here at about $8, right? We would have gotten out here because the price broke support. All right. So at $8. So we would have lost about 50, let's say 50 cents, right? What would have happened had we not gotten out here when the price broke support?
You were gonna lose a lot because it looks like it drops
Bingo, right?
under $3.
Yeah. So we would it would have went all the way down here.
That makes
All
more
the
sense.
way down here to about 250.
Yeah.
You guys see that?
Yeah, it makes a lot more sense now.
Yeah, it makes more sense now, right?
Yeah.
So the price, when the price broke support, right? Who was in control of price now? The buyers or the sellers?
The sellers, right?
The sellers. So remember, whenever the sellers, right, gets into control, we have to get out. And we'll know that the sellers are in control when the price break support. All right. So we would have bought here, gotten out here, controlled our loss. We only lost 50 cents. Let the price, right, get out. Like Jenica said, get out, wait, wait, wait. And then we would have bought here. Why would we buy here? Because the price did what?
Buyers, The buyers are in control now?
The buyers are
Yeah,
in
the
control.
buyers.
Very good. And the buy, how do we know that the buyers are in control?
Because it broke over the, what's it called?
It broke over
Resist.
The
resistance.
resistance, yeah.
Very good. Good job, guys. Good job. That's it.
Yep,
That's
Oh,
it. That's it. That's it. That's it.
good. I mean,
that was good.
Yeah, very good.
Cool.
Now we would buy here. And so we bought here at about $3, and here it is at $6.63. So we lost 50 cents here. No big deal. No big deal. We don't take it personal. We wait until the buyers are now back in control, because we only want to buy when the buyers are in control. So now we wait patiently. When the buyers are now in control, right, breaks resistance, we would buy, and now we would take another trade. So it's not personal. It's not what we want or what we think. We just follow the money, right? We follow when the buyers are buying, we want to buy. When the sellers are selling, they're getting out, we want to get out.
Right.
Okay. So,
Okay.
Danica, does that help?
Yeah. Yeah.
Yeah.
It
Makes sense,
seems
right?
it totally makes sense now. Yeah.
Yeah.
Thank you.
yeah, I get it
You're
too.
welcome.
It makes a lot of sense.
Ray, does that help?
Yeah.
Yeah.
It was always confusing trying to understand like the candles and everything. Like,
Mm-hmm.
but that made a lot of sense the way you guys see it now, how it goes up and down and whenever it breaks. So
Yeah,
that
now
makes
because
sense.
you see it as like a whole with like you could see like you're thinking about it as small businesses and you're
Mhm.
keeping track of each business and how each individual business is catering to their customers,
Mm-hmm.
and you're
Mhm.
keeping track of each business.
Yeah. Yes.
Okay.
Yeah. Just think in terms of this. Just think in terms of this. If everyone is buying, we want to go with the flow, right? And these are institutions, hedge funds, right? These are big institutions, hedge funds. So they're moving the markets, right? They have a lot of money, a lot of capital, right? We don't have as much capital as they do, right? So if they're moving the price and they're buying, we just want to piggyback on their trade. We want to get on the bandwagon and we want to be buying with them. If they're
Right.
selling, right, there's got to be a reason why they're selling. We don't know. We don't need to know why they're selling that stock. If they're selling, we've got to sell too. And we need to know immediately that they're selling so that we can get out early, not late, right? Because if we get out late, right, this could happen. So immediately when we know that they're selling, and we'll know that they're selling when the price breaks support. And then when they start to buy, right, we need to buy, and we need to buy immediately when they start buying, right? Not up here or up here. We need to know immediately when they start to buy, and we'll know that when the price breaks. As soon as the price breaks resistance, we need to buy. So we know exactly that's our entry and exit. All right, based on support, based on resistance, not what someone else thinks or what someone else tells us, right? We love our friends, we love our family members, right? But guess what? All right, if we are buying when they're selling and we are selling when they're buying, we're doing the opposite of what they're doing. All right. All right. Very good. Good job, guys. Good job. Good job. Good job. Thanks.
Cool.
Okay, we're
Thank
gonna
you.
go through Lewis's question, and then we I think Ray, we helped you with your question. So we'll go through the different systems and then we'll end there. Okay, so let's do that. Let's go to the website. Let's see here. And we have a, well, let's not do that. We'll stay here. We have too many systems to go through. All right. We have about 19 different systems. So we'll go through and we'll stay here. We'll go through just two of our systems, our popular systems. Okay, our popular systems, and they're on our website. All right, so you guys write this website down if you want to do further research. Okay, it's monstertradingsystems.com. But I'll go through our two most popular systems. Okay, two most popular systems. All right, so let's do this. Okay. All right, so here's our website here, Monster Trading Systems. Okay, we have about, let's see here. We have about 19 trading systems. Our most, so Louis, to your question, our most popular systems is Stock Boss right here. So we have 3 different systems for stocks, right? Stock Boss, Bullmaster, and Monster Short. Okay. Do not buy any of these systems, guys. All right. So we recommend you do coaching before you do any buying of any systems, right? One-on-one coaching. Then we have cryptos, right? For crypto options and futures. Okay. And then we have for forex, Monster Scalper and forex Dominator for forex. All right. We'll go over Monster Scalper. All right, one of our most popular system. And then for futures, we have Monster Futures. All right, for the futures market, Monster SP 500 for the S&P, NAS 100, and Monster US 30. That's our futures market. And then we have add-on systems. All right, add-on systems, right? Monster Market Tracker, Monster Futures Tracker, Sectors Tracker, all right, Forex Tracker, Stock Tracker, and Monster Systems Tracker. And we have what's called Heat Seeker. All right, I'll go over Heat Seeker. All right, and then we have bundled systems down here. All right, and that's me, and we do coaching here. Okay, so everything is on the website, monstertradingsystems.com. Lots of resources. We have lots of training videos. All right. That you guys can learn, lots of testimonials, right? Testimonials right here. All right, you can learn about our traders, success stories right here from our traders, right? Success stories right here. All right. But let me go to the systems. All right, and we'll go through Stock Boss and Monster Scalper. And but most importantly, we'll talk about why as a trader, we need to use a trading system. Okay. All right. All right. Stock Boss is one of our popular systems. All right. Our most popular system is Monster Scalper for forex. All right. Now, the disadvantage that we have with stocks, all right? So when you guys look to trade stocks, the disadvantage, there's some pros and there's some cons, right? The advantage to stocks, to trading stocks, is that they move slowly, all right? So there isn't as much volatility, all right? So you can manage your risk. Okay, you can manage. Trading in general is risky, all right, but we can manage our risk with stocks. Okay, as we get into the other markets, they become more volatile. All right, futures market, forex market, cryptos market, options market, right? They take a level of skill. All right, stocks are easier, but the one negative that we have with stocks, well, 2 negatives, is that there are a lot of stocks. All right, there's only about 22,000 stocks, so we got to go through a lot of stocks to find, okay, the best stock to trade. All right, The other thing concerned with stock is that it's very news driven. Okay, so there's always earnings, right? Always data that comes out, okay, that might affect trade. All right, so there's a couple of things that we've done to make it easier for our traders with Stock Boss. So Stock Boss, just think of it, Stock Boss, the name Boss, we can manage a lot of stocks easily. Okay, so what we've done with Stock Boss is we have what's called Heat Seeker. Okay, and Heat Seeker tracks the entire equity markets. Okay, so the entire stock market, and we track, right? We track. So Janica, back to you now. We track what the institutions are buying, all right, every single day. And what we are waiting for and what we're scanning for is for a break of resistance. So we want the price to do like this, right? We want the sell, we want to wait, right? Wait when all of that selling has been done. And then we want to wait precisely, we want to get the stocks that are precisely, right, breaking resistance so we can start to buy. Okay, all our system has a very unique feature and function that we use. Okay, and think of trading systems. The reason why we use trading systems is so that we can get an edge on the markets, right? Because things are moving really, really fast. So we need to follow the market. We need to know exactly what these institutions are moving. All right, we call it money flow. All right, so wherever that money is going, whatever they're buying, we want to be on top of that right away. Because if we wait and that price gets away from us, guess what? All right, we're not buying on a break of resistance, right? We might be buying all the way up here somewhere. Okay, so I'm going to show you guys the advantages of using automated systems. All right, and you know this in everyday life, right? Right. That's why we use iPhones and you know and not a flip phone. Okay, so we can use technology to give us an advantage. So Heat Seeker runs every day at the end of every day at 4:30. I'm going to run it now. I'm going to run it now. Okay, markets are closed, but we can still run it. So I'm going to run it right now. Run scan. So it just ran through 22,000 stocks. I'm going to repeat that. I'm going to do it again. If you guys look over here, you're going to see right here, it just ran through 22,000 stocks. Okay, and it's going to tell us, give us the stocks, bring back the stocks. These are the stocks right here that meet the criteria where, right, price should be breaking resistance or getting near to breaking resistance or have almost or have broken resistance so that we can now buy. So let's take a look at those stocks and we're gonna break them. I don't want to get into this, but sectors, all right? But it's gonna give us exactly the type of stocks we should be buying out of the 22,000 stocks in the market. Okay, so here's the first one here. And I know it's hard to see. Let's do this here. Now, every trading system that we have has a unique advantage where it gives us, the systems will give us an advantage. So Louis, in terms of systems, every system is different, okay? But what you will notice is that every system will give us a unique advantage, okay? So Jenica, what's this stock right here? We don't know whether it's a safe stock, whether it's a pop, we don't care, right? It's just a symbol to us. Is this stock right here breaking resistance or breaking support right here? I just want you guys, and Ray, you can help also. And Betty, you too. Asma, you can help also.
Which one am I looking at?
Right here, right here, right here. Is the price breaking resist? Is AUR breaking resistance or breaking support?
Broke resistance.
Breaking resistance. So we'll be buying or should we be selling?
How do you buy?
Buy. Very good. Let's go to the next one.
Yeah.
Let's go to the next one. DARK, DARK. All right.
I'm
Doc,
sorry, I'm having trouble hearing you.
Okay,
The
how about
volume went
now?
down for some reason.
How about now?
I'm
How
sorry,
about
go again.
how about now? Can you hear me now?
It's very low for some reason. I had to take a phone call. I came back and the volume's so low.
Can you guys hear me okay? Can everyone hear me okay?
Yeah, I hear you.
You guys can hear me? So you
Oh,
might
good.
want to check your volume, Janica.
Yeah, I did.
Okay. All right. This one here, is it breaking resistance or breaking support? DARK. It's just a symbol now to us.
It looks like it just broke resistance.
Breaking resistance. Should we be buying or should we be selling?
So you buy.
Buy. Very
Buying.
good. Very good. Now, look at this. What would you guys rather do? Buy it at $6, almost $7, or buy it here at $1.37? Which would you rather do?
At $1.37.
Very good. Would you rather buy it here at $7 where it breaks support and sellers are coming in, or would you buy it here where it's at the bottom here and it's
Yeah.
broke resistance?
Yeah, you buy at the bottom.
Very good.
Buyers are buying.
Very good, right? And you're not paying $7, right? You're paying $1.37, right? Let's
Yeah.
go to the next one. BBAR. All right. What is it doing here? Breaking resistance or breaking support?
Making support.
Right here,
It looks
right?
like it broke
Oh,
It broke.
resistance.
resistance.
Very good.
Yeah.
Broke resistance right there. How about this one here? How about this?
Support.
I know it's hard to see. I know it's hard to see.
Support.
So it's breaking, it's right here, right here.
I can't tell. No, that's resistance.
It broke resistance right
Yeah,
here,
it broke
right?
resistance.
Right. Who is in control now?
The buyers.
The buyers. Very good. Very good. What happened? What happened here? Hold on one second here. What happened here? Tell me what happened here. Analyze what happened here.
Mm,
It seemed like it went up
I'm
and
not
then
sure.
went down.
Yeah.
It went up, right? Very good. It went up. So buyers, it broke resistance, right? So we bought. And then what happened?
It crashed.
It
Yeah.
crashed, right? And it broke what?
Support.
Support.
It broke support.
Support.
And then
yeah.
what did we have to do? We had to get out, right?
Yeah.
Right?
Sell
Because
it.
it would have kept on going down, right? Very good.
Mhm.
Very good. Very good. All right.
Sorry,
let's
you
do-
were looking for language, weren't you?
Well, the terminology will come. The right terminology will come, right?
Yeah.
All we want to get is just basic understanding, right?
Yeah.
And we do this in life too, right? We want to stay away from the bad things, right?
Yeah.
Right. Just think of this, right? Selling is bad, right? So we want to stay away from the bad
Mhm.
and the good things. We want to gravitate to that. Same thing
Right.
here. Same thing here. All right. BDN. Okay, so that's that. Let's go to another one here.
It's-
Okay. Who's in control here? Just look, I want you guys to look at the chart here. What can you do? Tell me what's going on here. Anyone? Can you make sense of this?
Mm,
Sellers.
Sellers are in control?
No.
Well, I mean, I see a lot of green too.
Janica,
Buyers.
you so
Oh, no,
honest.
actually,
I
no,
love it.
I meant buyers. I meant buyers.
Buyers are in control?
I mean,
I was thinking that no, actually, I was thinking that sellers are in control, actually.
it looks like it's sellers. Yeah.
Yeah, I was thinking that sellers are in
Because I don't
control.
see it. It hasn't broken resistance.
That was
Doesn't
my
look like it
initial
has.
thought, that sellers were in control. That's what I was thinking when I initially shouted that out. It
Who's
may
in
be wrong,
control?
but
Who's in control here?
Buyers there.
Buyers. Okay, so look at this for a second. Look at this for a second. I lost it right here. So you guys notice that you guys kept going back and forth, right? Back and forth. There was a lot of indecision, right? Or confusion.
because they
Right.
both look the same.
So
Yeah,
they both look the same.
but the line, the line shows
So
it's breaking support.
CHS, so CHS, this is CHS and AUD here. What's the difference there? What's the difference? What's the difference
Right here, the
between
buyers are in charge
the buyers are in control here,
in
in
this
charge,
one. Yeah,
and then CHS,
the
who's in
sellers are.
control here? Who's in control?
Yeah,
Resistance.
Okay,
it's the sellers
the sellers.
because it just broke. It just broke support. The last one it shows.
Okay.
It might be going up, but it's probably going to go down.
If you were to, if I gave you guys a choice, okay, to put your money, put your hard-earned money, right? Your hard-earned money, all right, on this CHS or AUD, which one would you put your money on?
On this
I
one right here.
On this one here, Ray?
Yeah.
Why?
Because it's breaking resistance more than anything. It looks
Okay.
like.
Okay. And not this one. And not this one here. No,
Yeah.
hold
No,
on.
that one. This one breaks support a lot. It looks like it goes down a lot.
I want you guys to look at this. Take a picture. Take your phone and take a picture of this. Take a picture of this here for me.
Take a
please.
screenshot.
Mm.
I
A
can't.
screenshot, yeah. And then take a picture of this one here for me.
That just makes me sad.
What makes you sad?
That graph makes me sad.
Which one? This one?
That one,
Or-
yeah, the lazy caterpillar there.
Why do you call it a lazy caterpillar?
It just looks.
Huh?
It just
So
looks sad.
if this is a lazy caterpillar, right, Janica,
Yeah.
what is this one? What is this one here?
It's just a frantic caterpillar. Yeah.
A frantic caterpillar. Very good. A frantic caterpillar. Very good. Good job.
Yes.
So if it's frantic, if it's a frantic caterpillar, all right? Can you
A
make
lot of
sense of it?
excitement.
What's that?
A lot of excitement.
A lot of excitement.
Yeah.
Okay, so we don't want to trade this because there's a lot of excitement. There's no direction, right? There's no direction. The traders are confused. Everyone is confused. All right. So
Yeah.
if they're confused, guess what? Right? The price will be confusing.
Yeah.
The price is confusing here. These candles are confusing because the traders are confused, right? They don't know whether they should be buying or whether they should be selling. And you guys notice how you were going back and forth, back and forth, back and forth, right?
Yeah.
So this is not, we wouldn't trade this. We would not trade this, right? So we would trade this one. Guess what? Because there is a clear decision, right? Clear decision. All right. Okay, very good. Good job. Good job. So the bottom line, and we can go through every single system, but the bottom line, and Louis, just know that with every system, there is risk. With every market, there is risk. All right. Some markets move faster. Every market has price action. Every market, right, will focus on support and resistance, but the markets behave a bit differently. All right. Every market has different levels of risk. We can minimize the risk by getting out when the sellers are getting out and we can maximize our profits when the buyers are buying. Okay, when the buyers are buying. Okay, so we have lots of stocks here. And if you guys notice, we can go through these, and a lot of these stocks, rather than manually going through 22,000 stocks, we can use systems, automated trading systems. That's why we call monster trading systems to help us. So we want the systems to do all of the hard work, right? And so that we can focus on trading. Okay, so that we can focus on trading. All right. There are different systems, right? When you guys think of the markets and trading systems, it's not what you want. Okay, it's what the market is doing. So we have traders here like Sedona is one of our traders. Solomon is one of our traders. Lewis, no, not Lewis yet. Joe is on, if this is the same Joe is another one of our traders. And Solomon in particular have several of our trading systems, okay, for the different markets. So what that allow, because we have 19 systems, okay? So what that allows us to do is this, right? When the market moves, right, the big institutions, the big hedge funds, when they move from one market to the next, so when they stop trading stocks, for example, all right, we'll know that because we'll get fewer stocks here. When we do our scan, right, we'll know right now we have 109 stocks, right? We might get to the point where we only have 5 stocks or 10 stocks. We'll know that the big institutions are not trading stocks anymore. All right. If they're not trading stocks anymore, should we, simple question. Well, I think it's simple. If the big institutions are not buying stocks anymore, should we be buying stocks? Yes or no?
No.
No.
Very good, right? So if we do a scan for 22,000 stocks and we're not getting all these stocks, we're getting 5 or 10 or 20 stocks, we know that they're moving, they're buying a different market, right? They might be buying forex, or they might be in the futures market. So we have different systems, or they might be buying cryptos, right? So we can see what they're buying, all right? Or they might be buying the US 30. So the reason we have multiple systems and we trade multiple markets is not because we have a preference for a particular market, and we have traders that they like a particular market, okay? But the bottom line is this: when they move from one market to the next, all right, we need to have some knowledge of that market, but most importantly, we need to have the tools, all right, to capture those moves in that particular market. That makes sense?
Yes.
Yeah. Okay. So, Louis, the best thing to understand about the trading systems, I mean, it's really hard to go through each and every. We have so many different trading systems that do so many different things, right? And these are all the trading systems here. What to understand is that certainly you as a trader, you will have a preference for a system. You will have a preference for a time frame, right, that you want to trade, right? Rather it's day trade, swing trade, all right, or position trade, okay? But we go through all of that in the coaching, right? We do a lot of that in the coaching. But just understand, the reason we use trading systems is to automate, right? Is to automate, right, that process. So we're not spending hours and hours trying to find those opportunities, because by the time we spend all that time trying to find those opportunities might be gone. All right, those opportunities might be gone, and we might miss those opportunities. So what we do is we have systems in place that's running constantly, looking for opportunities so that we can now get on the trade. All right, very good. Does that help, Louis? I know we still didn't go through every system, but on the a good thing to do is our evening classes. When we go through every evening, right? From Sunday through Thursday, we go through each system and we go through the picks. All right. So we go through trades that we are trading in each system. It's a good way to learn the systems. Okay. So I hope this helped. Janica, good job. Good job. Good job. I'm so
Oh,
proud of
thank
you.
you. Thank
I'm
you
so
for
proud of
explaining
you.
everything. I'm sorry my sound went out, so I had to put you up to my ear half the time.
That's fine. But you did an amazing job for not knowing anything about trading, right?
Well, thank you.
To get it.
Thank you
And
for
good
being a
job.
good teacher.
You're welcome. Good job, Ray. Good job, Ray. All right.
Yeah,
Good
thanks.
job. And everyone else, thanks for coming. And keep coming back to our
Yeah,
beginners
definitely.
class. And even the weekly classes we do, all right, just sit back, right? Just sit back and watch as we go through the markets and the systems. That's the best way to learn. Okay. Everyone have a good weekend. Have a good weekend, guys. Okay.
You
Thank you.
too.
Thanks for coming.
Take
And I'll
care.
see you guys next Saturday. Okay. And throughout the week. Take care. Bye-bye.
Take care.
Bye.
Bye-bye.